Ever wondered if everything you've heard about real estate investment is true? Ah, the world of real estate investment, a realm filled with opportunities, risks, and of course, a plethora of myths that can lead even the most astute investor astray. Right off the bat, let's clarify that not all advice is good advice, especially when it comes to real estate investment. Myths, misconceptions, and misinformation can often cloud our judgment, leading us down a path of potential financial pitfalls. But fear not, for we are here to shine a light on these myths, illuminating the truth hidden beneath the layers of misconceptions. One such myth that often circulates in the market is the notion that real estate investment is a guaranteed route to wealth. While it's true that real estate has been a profitable avenue for many, it's certainly not a guaranteed ticket to riches. Like any investment, it requires careful planning, market knowledge, and a bit of luck. Another commonly held belief is that you need a lot of money to invest in real estate. This notion can discourage potential investors from exploring this market. However, the reality is that there are multiple strategies and financing options that can make real estate investment possible, even with a limited budget. A third myth that we often hear is that real estate is all about location, location, location. While location is indeed crucial, it's not the be-all and end-all. Other factors such as the property's condition, the local market trends, and your investment strategy can play an equally significant role. And lastly, there's the myth that real estate is a passive income source. While it can certainly generate income, managing properties, dealing with tenants, and maintaining the investment can be anything but passive. These are just a few examples of the many myths that surround real estate investment. But don't let these misconceptions deter you. Instead, equip yourself with the right knowledge and understanding to navigate through these myths. Stay tuned as we debunk these myths and expose the truth about real estate investment. Myth number 1, real estate investment is a quick way to get rich. We've all heard this one before, haven't we? The allure of rapid wealth accumulation through property investment can be enticing, but it's not as straightforward as it may seem. One of the common misconceptions is that real estate is a surefire way to generate wealth overnight. The truth, however, is far from it. Real estate investment requires patience, research, and a keen understanding of the market. It's not a lottery ticket, but a long-term game that demands strategic planning. The second myth we often encounter is the belief that real estate investments never incur losses. This presumption can be misleading and potentially hazardous. The real estate market, like any other, has its ups and downs. It's true that property values tend to increase over time, but they can also experience periods of stagnation or even decline. Remember, there are no guarantees in any form of investment. And then there's the third myth. Real estate investment is an easy way to earn passive income. While it's true that rental income can be a fantastic source of passive income, managing properties is not always a walk in the park. It involves dealing with tenant issues, maintenance, and property taxes, among other things. It's not as passive as you might think. Finally, let's dispel the myth that you need to have a lot of money to start investing in real estate. While it's true that property investment can require a substantial initial capital, there are various strategies and financing options available that can help you get started with a smaller sum. As we can see, these myths can create unrealistic expectations about real estate investment. It's important to approach it with a clear understanding and realistic expectations, knowing that success comes from carefully planned strategies, a good understanding of the market, and above all, patience and persistence. Now that we've debunked some myths, let's explore the truths about real estate investment. So let's dive right in. The first truth is that real estate investment requires research. It's not about buying the first property that catches your eye. You need to understand the property market, the location, and the potential for growth. For instance, investing in an area with an expanding population or a growing job market could lead to higher rental demand and potential capital growth. The second truth, patience is a virtue in real estate investment. It's not a get-rich-quick scheme. Most successful investors will tell you that wealth creation through property is a long-term game. It takes time for property values to increase and for rental income to outweigh the costs. Next up, financial planning is critical. Real estate investment is a financial commitment that requires careful planning. You need to consider the costs, not just the purchase price, but also ongoing expenses like maintenance, insurance, and property taxes. You also need to plan for potential periods of vacancy. Being financially prepared can mean the difference between a profitable investment and a costly mistake. Understanding market trends is another key truth. Real estate markets fluctuate, influenced by factors ranging from economic conditions to government policies. Being able to anticipate these changes can help you buy low and sell high. For example, during a market downturn, you might find bargain properties that will appreciate in value when the market rebounds. Lastly, it's important to remember that real estate investment is not a one-size-fits-all strategy. What works for one investor might not work for another. It's about finding the right property, in the right location, at the right time for you. These truths, however less glamorous, form the foundation of successful real estate investment. Understanding the difference between myths and truths can guide you in making informed investment decisions. In the world of real estate investment, there's often a thin line between myth and truth. This line can blur so easily, leading many to make decisions based on misconceptions, potentially resulting in poor investment outcomes. It's crucial, therefore, to compare and contrast the myths and truths we've discussed earlier, as understanding this difference can be your compass in the vast sea of real estate investment. One prevalent myth is the belief that real estate investment is an instant cash cow. The truth, however, is quite different. Real estate investment is not a get-rich-quick scheme, but a long-term game. It requires patience, strategy, and a deep understanding of the market to yield substantial returns. Believing the myth can lead to hasty decisions and financial losses, while embracing the truth sets you up for steady growth and long-term success. Similarly, another common myth is the notion that you need a wealth of knowledge and experience to dive into real estate investment. The reality is that everyone starts somewhere. While knowledge and experience are beneficial, they're not prerequisites for success. What's essential is the willingness to learn and adapt. By believing the myth, you might never take the first step. Yet, by accepting the truth, you open up a world of possibilities. Lastly, there's the myth that real estate investment is risk-free. The truth is, like any investment, real estate comes with inherent risks. However, these risks can be mitigated with proper due diligence, risk management strategies, and informed decision-making. Falling for this myth can lead to unexpected pitfalls, while understanding the truth can help you navigate these potential challenges and set a course for success. In conclusion, it's crucial to separate the myths from the truths in real estate investment. The former can lead to disastrous results, while the latter can guide you towards making informed, strategic, and ultimately, successful investments. It's clear that falling for the myths can lead to disastrous results, while embracing the truths can pave the way for success. Let's recap what we've learned today about the myths and truths of real estate investment. We began by peeling back the layers of some common misconceptions in the realm of real estate investment. Remember, it's not always as easy as buying a property and waiting for the cash to roll in. It requires strategic planning, market understanding, and a good deal of patience. We also dispelled the myth that real estate investment is only for the elite. With a well-thought-out plan, anyone can dive into this sector and reap substantial benefits. Next, we debunked the myth that all properties are good investments. Not every property is a gold mine waiting to be discovered. It's crucial to conduct thorough market research, consider location, and evaluate the property's potential for return on investment. Venturing into the truths of real estate investment, we underlined the importance of understanding market trends and dynamics. Real estate is a fluctuating market, influenced by various factors such as economic conditions, interest rates, and local development plans. Keeping your finger on the pulse of these changes can help you make informed decisions. We also highlighted that real estate investment can indeed be a source of stable income if managed correctly. Whether it's rental income from residential properties or profits from commercial ones, when done right, real estate investment can provide a steady cash flow. Finally, we compared these myths and truths, emphasizing the importance of knowledge and research. We reiterated that real estate investment is not a guaranteed ticket to wealth, but a journey that requires dedication, understanding, and constant learning. To wrap up, remember that understanding the realities of real estate investment is vital. It's not about quick riches or effortless gains. It's about strategic planning, understanding market dynamics, and making informed decisions. Remember, informed investment decisions are your best tool for success in the real estate market. Thanks for joining us, and we'll see you next time.